And the Federal Reserve hit a pause on rates on Wednesday after cutting rates for 3 straight meetings late last year. Fed Chair Jerome Powell says inflation is still too high to declare victory, even as the U.S. economy continues to show surprising strength heading into 2026. The decision keeps borrowing costs at their current level after 3 rate cuts late last year, and comes as divisions inside the Fed deepen, tariffs push up prices, and questions swirl about the central bank's independence under President Donald Trump's second term.
We see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals.
The Fed says the U.S. economy is entering 2026 on solid footing, with steady growth and signs that the labor market may be stabilizing. Inflation, while cooling, is still above the Fed's 2% target. Listen to this.
The incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting, we're evidence of stabilization. So it's overall a stronger forecast, really.
Powell says consumer spending continues to surprise, even as surveys show Americans feeling pessimistic about the economy. One major boost is investment in artificial intelligence data centers, which the Fed says is helping support growth. On inflation, Powell pointed to tariffs as a key reason prices for goods remain elevated. Well, he called that better news than inflation driven by excess demand, because tariffs are expected to cause a one-time price increase, not sustained inflation. Excluding tariff effects, core PCE inflation is running just slightly above 2%.
Most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand. And that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods.
Services inflation is now showing signs of ongoing disinflation. Another encouraging signal for the Fed, and Powell says if inflation continues to cool and the labor market weakens, rate cuts could still be back on the table later this year. But inside the Fed, disagreement remains. At the December meeting, 3 of the 12 voting members dissented. 1 wanted a deeper cut, 2 wanted no cuts at all. And those divisions have carried into 2026. Investors now expect rates to remain unchanged until at least June, when the Fed is scheduled to meet under the new leadership. Powell also issued a warning on the federal budget deficit, calling its current path unsustainable, even though the overall debt level remained manageable for now. Powell defended the independence of the Federal Reserve, saying political control over monetary policy would undermine public trust. He confirmed attending Supreme Court arguments tied to President Trump's efforts to remove Fed Governor Lisa Cook, calling it one of the most important cases in the Fed's 113-year history.
I would say that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. So it's precedented, and I thought it was an appropriate thing, and I did it.
Well, Powell's term as Fed chair is expected to end soon, with Trump set to name a successor ahead of the June meeting. Until then, the Fed appears firmly in wait-and-see mode, watching inflation, jobs and tariffs closely before making its next move.